Hello, ladies and gentlemen. So, welcome to the task section, and I've done the video already on static versus dynamic or developing value, whatever you want to call it. And look, we're going to start. Basically, what I'm going to do is I'm going to do about 30 days as quickly as possible. Obviously, I can't go as slowly as I want you to go. You can take your time about this, and I'm going to show you how to use the market replay. So you can do this. Great thing is you can do this any time of day, okay? Weekends, you don't need to use the live market if you don't want to. Ideally, if you can, obviously do it in real time. Stick your stuff in the Discord, share with each other your expectations for the day, this type of prep. As we obviously develop more detailed prep, that will become much more of a fruitful exercise. But why not? Even if you want to do your basic stuff, you can do it. In real time with your slightly delayed data is fine. Obviously, there'll be other people then. I might not, obviously, I'm quite busy trading, right? You've seen, you know, not, I don't mean this in a horrible way, but let's be honest, probably there aren't many people out there who actually do this for a living, as well as obviously the education side of things. But I obviously have shown I do this for a living, and the thing is, I need to balance that. That's the point, with obviously being really focused at the market open. And I've even shown you in the last video, I'm trading, decent size, and I only say this is, look, I apologize if you show me something at the pit open 9 a.m. when the crude market is obviously going crazy. I'm not going to be able to have a look at it immediately, but you can post it in there. I'll check it, a bit later in the day if there's anything that you want me to have a look at or give you feedback on. Happy to do that. Or there'll be other guys obviously in the Discord as well. You can share with them. Like I said, I want it to be like a virtual institutional trading floor. So don't be shy. If you want to do this and post it in there, that's fine. If you want to do it in your own time because you're not available, obviously when the market opens are happening or the market is actually active, that's fine. Do it in your own time then. Do it at the weekend. So I'm going to show you how to use the market replay. We'll talk about that when we're on that. But what do I actually want you to do this for? Well, firstly, it's obviously bringing developing and static value together. Talked about at length in the video, developing versus static value, which was the sort of precursor to this. This is me just showing you what I want you to do, and obviously giving you some examples so you have a frame of reference. But one of the main things is, as I said, is I want you to start developing this hypothesis, building. And this is really, look, I'm going to show you a journaling section. There's going to be a whole big section on that. But let's get you started, right? This is why I don't have a very sort of clear way I want you to do this, is because honestly, it doesn't matter. As long as you get to a point, like I said, I used to print it out. If you want to print it out, print it out. Maybe be environmentally friendly. Don't print it out. Maybe you want to write it out, type it out, whatever you want to do. Or you can just put it on the chart if you want. I'll show you how to do that. It's basically just put text tool and just type it on the chart. Whatever, everyone's got their different ways of doing it, okay? That's why I don't want to restrict you, because then it becomes too mechanical. And I keep saying that. I want to move you away from this mechanical mindset to a discretionary mindset, which everyone is capable of, and that's where you're going to build your edge. So enough on that. Let's at least have a rough guideline of what I want your prep to include. And I talked about it a lot in the video, the section, dynamic versus static value, but what is it ultimately going to look like? So I did say I want you to have ideally a section where you just look at composite value. Why do I say that? Because it's static, right? Very much looking at how's the day developing relative to where we've been before, right? And also sets our trade expectations. So I want you to think about the lines in the sand. So for me, very much right now, because I haven't introduced the other VWAPs, weekly, monthly, daily, all that other stuff. The lines in the sand, and typically these do tend to be mine. Obviously, if I've got other things which I'm going to show you, other higher time frame VWAPs and whatever then I will kind of decide if I want to adjust this or not. But we're not quite at that stage yet. So just to get you started, it's either going to be your value area high. Obviously, I want you to mark the POC if you can, and then your value area low. So these two typically are going to be your CVA, composite value area, lines in the sand. Then, as I said already in that section, I just want you to have your expectation, trade expectation versus this line in the sand. And we'll do this together now. So, if it's say 60.50, I'm just making this up. We're actually going to go through the E-mini because at the moment, obviously, oil is a very volatile market. If you want to replay it, look, do the oil market, right? But just go back because right now is a very volatile period, and I do trade it. You've seen me trade it, but look, again, I've been trading the market for years. It's not the best environment for you to be learning on. Maybe in the future you can kind of look at when oil market ranges are a lot higher. Right now, the average range is very high. It's not conducive to you learning. Stick to the S&P if you want to do recent. If you want to go back a few months and market replay crude oil, 100% recommend you do it. Depends. You could be watching this. I always say you could be watching this in 1 or 2 years' time, 5 years' time, and the oil market's really quiet. Fine, do oil. For these purposes, I'm going to do the E-mini. It's not going to make any difference, honestly. But your expectation, let's say it is crude oil versus where your sort of line in the sand is, and then just have it, greater than is going to be either, it could be, obviously you're looking for a breakout away from value, so, BPB, or you're looking at a return to some sort of value area, back to value, right? So, RPB, okay, and then obviously it'll be relative to that. This will become clear as we do it. Then have your target. That's going to be according to what? Your value expectations framework. Value expectations framework, and so put that down. So, we've obviously been through this. You should have it printed out. We talked about this. If you're breaking into value and then your expectation is to obviously stay in balance or become balanced, is to go to the other side of balance with your obviously scaling out potentially if you want at the POC. And obviously if you're breaking out of balance, the value area low, value area high, then it's very much to go in balance, and your target will be the next composite value area, right? And that's why you can number them. Because, if you've got say you've got a big composite like this, and you really start the day there, and then you start to break out of it, and you could have an old one marked here. That's going to be your target essentially. Ideally you want to get inside, but to be on the safe side, just take it to the sort of value area low. And just to make your hypothesis easy, you can call this A and you can call that B. So you can just say, expectation target is value area low, would be CVAB, right? That's your hypothesis for the day. You can draw these on if you don't want to write it all down. I'm leaving it to you to decide. Do whatever works for you. I think visually it's quite good. You can always just obviously just draw it on your chart if you want, or whatever works for you really. It's up to you. Or you can just maybe start making a note of it, see how you get on, and then move over to whatever. Try both. And then obviously this is you can call it dynamic. I also, to be honest, I interchange a lot between dynamic and developing. It's the same thing really. I like to call this, like I call this the CVA, I like to call this the DVA, developing value area. And what I want you to do is I want you to first mark the overnight condition. So market condition, rhythm, you'll obviously have the VWAP for that. And then any failures or achievements, okay? So I've written VWAP TP here. So it's the believe you had that sheet, isn't it? The trade plan. And the reason I've done that is because you can print out your sheet if you want, but hopefully from the last exercise, you probably know it by now. Market condition and rhythm, that's really it, that I'm looking for you to obviously determine. And then any failures, achievements, and we'll talk about this, has it managed to obviously break your line in the sand overnight and fail, which obviously adds more credence to the fact that you may obviously look to break out, out of value, and then move down to obviously the next value, etc., etc. So we'll talk about this anyway. We'll do it together. And I'm not going to do this with you because obviously I don't have the time to sit here going through every minute or every hour. But if you have the time, I would, and you've got nothing else on. I understand if you have got plenty on and you want to go through it quickly, it's fine. And I'll get you doing this later. But if you do have the time, obviously every hour or couple of hours, just make a note in your journal of any sort of changes that have happened in terms of your narrative. Has anything changed? Has the market condition changed on a developing basis? Has the expectation changed, versus static? I.e., have we now broken inside our line in the sand? Have we broken below the line in the sand? What's changed? How did it happen? Just make, observations and notes as you can. And obviously that's going to make your journaling process much better. But we'll talk about journaling, as I said, a bit later. But I think this is really crucial so you at least get started journaling. All right, let's get on the charts. Okay, so here we are on the charts, and look, you might be wondering what's happened. Envy, have you had a moment with your charts? No, it's not that at all. And in fact, there's a reason why it's a bit of a mess. It's because I want you to, if you want, use market replay. I'm going to use it, obviously, so I can quickly cover 30 days. But ideally, you just use it in the moment. Be in the Discord at market opens, post it, whatever you want to do. And like I said, might not be able to take a look at it immediately because obviously, as you saw, I've got quite a bit of positioning on and whatever, and I need to be focused there. But at some stage, I'll obviously be happy to have a look, or someone else see if you can find another guy, trader, or whatever, or lady who's in there who you can share your expectations and your hypothesis with, and obviously see and compare and learn from each other. And I'll obviously be in there from time to time. I'll have a look and stuff. But like I said, if you don't necessarily have the time to be there on the spot, because I understand some people work or whatever, and you want to do it at the weekend, you can use the market replay function, okay? So what you need to do basically is, the reason I've done this is, because you see, I've got here the stage 1 profile chart book. What I like to do, I'll be honest with you, I've been doing this for so many years now, and look, I literally spent about a year where every weekend I did market replay, probably longer than that. The reason I didn't say a few years is because I'm actually embarrassed to admit that I gave up on weekends for a long period of time. But, that was just me. I'm not saying you necessarily need to do that, but there probably will be a phase. And anyway, it's easier for you, right? It's more practical, especially if you're not around every afternoon, you work or whatever, you want to do this in the evenings. Market replay is a brilliant function because you can simulate the market. But here's my point. The reason why it's a bit of a mess is because if you're going to do it, I like to have the minimum number of charts because it can really bog it down otherwise if you've got stuff you don't need open. Because don't forget, it's simulating everything. It's going to have to reload, and just the sheer processing power it requires for this is going to be greatly magnified if you've got unnecessary charts open. So for this, I'm just going to do the ES. So what I'm going to do is, and I want you to do this, I've given you a profile chart book. Just shut down everything we're not going to use. So we're not going to use any crude oil charts. So you see this, I'm getting rid of anything that's crude oil, right? I'm getting rid of it. Just remove the chart. Yeah, I'm not going to use this. If you want to continue to use this in the way that I suggested, that's fine. If you want to maintain this to help you do your balances and stuff, I'm not. So I'm going to get rid of that. And let me just move this to the side. What else have I got here? So I'm going to get rid of that. Okay. And I'll just see, have I got anything else? Nope, that's it. So you see, I've only got two things now here. So I've got the ES and I've got this, okay. Then what I'm going to do is, what it is if you're going to go back further, like if you want to go back a few months and this is crude oil, remember you can do the same process. I want you to do the same process with crude oil and go back a few months. Right now it's incredibly volatile. If you want to try it, fine, do it now. It's not a problem. I'm not saying it's a problem. I'm just saying because you're at the beginner stage and work on obviously some orderly conditions to obviously boost your confidence and get some learning under your belt, then by all means go to more volatile conditions. But if you want to go further back, then obviously you won't be able to do what I'm doing now, depending on how much further back you're going to go. But what it is I'm only going to go, so I'm going to start with today. So, no cherry picking. I'm literally just going to do randomly the last 30 days. However, I've got basically, if I go to chart settings, you see I've got 365 days. Do I really need that? My market replay is going to get bogged down. So personally, I'm just going to do 60 days. That give me plenty of room going back the other 30. So I'm changing this to 60. I'm going to click on OK. Just remember, if you do market replay and this has only got 60 days and you try to go back 6 months, it's going to fail. So you'll need to change this depending on how much back you want to go. So that's loading, and then here, chart settings, and I'm doing the same things. Do you see? It's going to help my system run properly when it does the market replay. It's going to keep it clean and efficient. There is a way where you can just link the charts you want to do market replay to keep all the others open, but it just has its own issues. I'd rather just, rather than complicate matters for everyone, let's just keep it simple and have a pure ES market replay. Let's just keep it like this. So this is the market as it stands. Okay, as of today. Okay, so then you go File, click Save As, and then obviously it'll give you the option and you can just rename it whatever you want. So I'll let you do that in your own time. And in fact, no, let me do it. Sorry, just give me a second. Save As, and I'm going to save it as ES market replay. Okay, and then save. In fact, sorry, I should have done that on the screen here, but it doesn't matter. It's pretty obvious. You just go File, Save As, and it gives you obviously the opportunity to change your chart book name. Okay, so you'll still have your original chart book. You've just created a new chart book called ES Market Replay, and what that's going to do is going to enable the market replay to run really fast. Okay, so just give me a second. I'm going to organize this nicely and I'll be back in 1 second. Okay, so this is how I've organized it. It's up to you how you do it. I'd like to have just a little, so really you just need one screen, you'll be fine. You can have them side by side. You can have them overlapping if you want. You can have this, full screen. You can have the chart full screen, whatever you want. It's up to you. There's no right or wrong way of doing this. You can have one full screen, then the other one, minimize, whatever's comfortable for you. Right now, we're not looking at the cumulative delta. We will. Let's just get rid of that, as in just minimize it down the bottom. And I think we're all good to go. And one thing I need you to do is, obviously, you've been drawing composites on here, like that. And I want this to now show on this chart. So I'll show you how to do that. If you just go to chart settings, okay, F5, and go to advanced settings 2, and it says copy chart drawings from chart numbers. There might be something in there. It should be blank, but depends what template I've put in there. Just clear that if there's anything in here. And I don't know what number this will be on yours, the market profile. So I'm using market profile blocks, ES. Just make sure it's ES, of course. And I've got it. Can you see it will say at the top market profile? Mine's blocks. If you're using letters, it's fine. And it says hashtag, which is number 1. What that means is that's chart number 1. So in here, I want it to copy chart drawings from chart number 1. Okay. But yours might be a different chart number. I don't know what that is. Okay, and obviously just remember to make sure that and I've said this to you guys before, but it's fine. But because it depends when you're doing this, and the template, is it up to date or not, or whatever. Just make sure that the contract that you're using is the most liquid contract. Obviously, it's very late at night, to be honest, which is, hands up. I've obviously not got much of a life. I'm doing this late at night, but I find it nice and quiet outside and whatever, and I can really get stuff done. So that's why the volume is really low, but typically when you do this, it may be much higher. So you can see here, my ES June contract has got the most volume at the moment, 21,900. So just make sure that that's what's loaded, right? And if it isn't, so I'm looking at ESM20. Obviously, these are live contracts. Your code's going to be slightly different, but ESM20. Let's go back to the chart. Have I got ESM20? Yes, I do. ESM20, ESM20. If it isn't, you can just go chart, perform future symbol rollover, and I've already got it as ESM20. It should automatically find for you obviously the most liquid contract. But don't do this if you've already got the most liquid contract, because then it will move you to the next one, which won't be. So first check, obviously, like I said, on the list, as I've already explained in the foundation course, and just make sure you've got the most liquid contract, because you may be doing this in the future at some time, and obviously contracts may have rolled over by then. So we're all good to go. We've changed this. Just make sure it works when you, obviously, if you draw, see, it turned up there. So just make sure that happens. And now to use the market replay, right, it's just chart, and then you go to replay chart control panel. Sorry, mine went out of the screen, and then this is the control panel, okay? And like I said, there is this option where it's charts with same link number. I don't want to confuse people, all right? At the end of the day, if you've got 20 charts and you just want to be the ones that run, you can do it, but it just confuses matters. Let's not confuse matters. Let's just keep the ones we need and create a separate template for it, right? It's the most sensible way of doing it. So it's all charts in Chartbook, because you want both of them. You don't just want single chart, which would be this one. You want all charts in Chartbook. Replay mode, we're just going to do standard, okay? We're not doing anything heavy, like doing any systematic algorithm testing or anything like that. So you don't need to calculate every tick. It's just standard replays, very, very accurate. It's going to be perfectly fine. And then I use start date and time. Typically I'll do 5 in the morning of the day, because that's pre the open, isn't it? So we've got the 14th, and let's go back then, about a month. So I'm just going to go to the 15th of the previous month, which is basically a full calendar month then, isn't it? So what am I doing here? It's American dating, does confuse me sometimes, but that's okay. 15/04/2020, 5 o'clock in the morning. Speed, I'll just leave at 1 for now, and then I'll talk you through all of this when we actually hit play. So then you just hit play, and it's gonna reset everything. Now I've obviously got a live account, but if you don't, then I don't think it will give you this prompt. But it obviously will only work in trade simulation mode. So I'm just going to press yes. Clear all data, yeah, that's fine. Okay, so now it's just going to take me back to the point that I've chosen, 5 p.m. 15/04/2020. You can see the market's already started moving, working very nicely. Pause. So, okay, so we're kind of where we want to be. What are the options? So what it is when I hit play, I can play normal speed 1 times. If you've got plenty of time in the day and you really want to just simulate the actual market, do it at the normal speed, right? But obviously don't start at 5 in the morning, because the action doesn't happen till around 9:30. Obviously this is the E-mini S&P. It's a bit of a longer day, but I typically don't trade until about 9:30 coming into the open, as I said. So just make sure that that is at the right time. And someone did mention something to me, and I might just mention it here actually, if you don't mind. If I get an opportunity and I haven't already done this, I may have already done this somewhere else. I'm going to put a placeholder in about this, but I realized that what you want to do is data trade service settings. Just make sure your time zone is set to New York, because otherwise what it's going to do, especially if you live in the UK and you don't live in the EST time zone, it's going to use your computer's time zone, and therefore your market profiles are all going to be wrong. So I'm probably going to put a placeholder about this when you come to do the merges anyway. So you should have seen this already, but if you haven't, just make sure that you've got the time zone correct, okay? And therefore, when you're setting this time, remember this is New York time, because it's obviously US futures. We want to be going in at 9:30 US time, right? So that's typically, depending on obviously the time of year, sometimes you get these daylight saving shifts, don't you? But it's typically 5 hours. So if you're in the UK, that's going to be 2:30 your time. But when you're simulating this, doesn't really matter. But if it was real life, obviously it'd be 2:30 in the afternoon. But yeah, just change that, because otherwise it will obviously it won't match the correct timings. It will be your local times or whatever it is. So just make sure that's changed. And then, so yeah, coming back to the options, when you play it, like I said, you just play it at normal speed. You see, you're just playing it and the market's moving. However, what you can also do, and don't forget, this isn't going to move because obviously this will change when it opens 9:30. These are only RTH profiles, right? You can change the speed. So we're playing it right now. Look, you can change to like 15 times speed. I don't have a recommendation. Play around with it. See what works for you. Do you see 240? You're starting to really move quickly now, isn't it? Speeding up big time. Or you can pause it. I've played around with both, to be honest. I've used different speeds. I also like to, so let's just put that normal speed. I don't necessarily use these, number of trades, next bar, any of that, but I do like to use this. So hours, minutes, seconds. Sometimes I might jump by 1 hour. If like it's 5 o'clock right now and I just want to quickly get to the open. Do you see? I'm just jumping 1 hour at a time. That's pretty good. I like that. Or you can, obviously, and then when you get close to where you need to be, you can change it to minutes. Guys, I want you to play around with this. You're going to learn by doing it, making mistakes, messing it up, whatever. Play around with it to your heart's content, and really, that's how you're going to learn. I'm happy to obviously show you the basics, but look, don't be scared of, just messing around with it. Hit play. Look, now it'll move every 2 minutes. It's just every 2 minutes. I like doing this when I'm getting into the areas, might place a trade, and then I'll just do skip forward about 2 minutes at a time. Now, what I'm going to actually do myself is I'm going to go through this first day a little bit slowly, but then I'm just going to jump 12 hours at a time, and I'm going to show you essentially what I want you to do. So, but I want you to do it at this slower pace, okay? Obviously, in the interest of time, we don't have 12 hours to do a video. I'm going to try and keep this down to maybe an hour tops. Obviously, say that might go on longer, but I'm going to try my best to do that. So what I'm going to do is first is I'm going to just put in some merges. So I'm doing really rough and ready, just so I can have something to sort of compare against. Okay, so I'm going to merge that and that, and then I'm going to put that in. Right, so you see it there. Don't really have anything up here, so I'm pretty happy with that. I think we're good to go now. So I'm going to hit play. Okay. Is it moving? Yep. Let's speed this up. So let's just do, let's kick it forward 1 hour. Pause that 1 second. Sorry, where are we? Just want to check what time it is. 8:53. Okay, let's play that. So we're coming into the open. Let me just speed. So the speed is 1, but let me just jump this forward about a couple of minutes at a time. Can you see what I'm doing? I'm just moving it forward, so it's 10 past 9. I just want it to get into the open, basically. And in fact, it's actually a good time for us to do this. Now, I'm probably not going to do this for every single one, but what I'm going to do is I'm going to do a terrible impression of a basic hypothesis on here. But you know, like I said, you can cut this out. You can do what you want with it. Really, you can use this. I use this thing called Epic Pen. I think it's free. I've got the pro version, but I believe it's free, and you can obviously draw your hypotheses in, etc., etc. Okay. So what I'm going to do is I've got it on, because honestly I don't do this. I apologise. I'm going to keep looking at the PowerPoint that I'd put together, just so I can roughly follow the guideline. Let's put our hypothesis. So you've got two options, right? I've got this sort of what do I call it? T. Can you see text? And therefore I can where is it gone? Modify text, and I can type it in here. CVA. You know, what have I put here? Line in the sand is XYZ. Let's close that down. Because what it is we've got one line in the sand down here, don't we? And then we've got, do you remember what I said? We've got nothing above. I've said to you, if you don't have anything, you can just use the prior value area. It's fine. Okay. But I would be careful. I'd make sure that you maybe change the color of that, just so you know. I'm probably going to choose a terrible color here, but okay, just so you know. In fact, that's terrible. Change that again. Just random picking color. That's alright. It's not great, is it? But it's better. You see, so I know that's my prior value. It's not a composite, but it's the best that I've got at the moment. So what's my line in the sand? Do you see? Now I can kind of mark this. So I'm not going to do it by text. It's going to take me too long. But you see my point. You can go to text, and you can do all of this slowly by text, and you can say CVA. You know, line in the sand is what? 2815? Is that 2815? 2815. What's my expectation? Might just be easier for you to write this down. Probably take like 2 seconds instead of having to type it. It's just if you want. I'm just giving you some different options. Expectation is what? So below, less than 2815 is breakout of value, pullback, because we're coming out and then going down, and then stroke greater than 2815. You don't even need to put, if you don't, you can either put line in the sand and then just put less than, breakout, pullback, greater than. I'm just doing it the long-winded way, but you know, whatever. Like I said, you know, you can figure this out. It's quite obvious. Greater than 2815. 2815 is a return to value. We break up there. We're expecting this to return to value. And then what's up? I put your target. You know, is at the moment as it stands 2737. And then you can put here CVA, I don't know, B, call it whatever you want to call that. It's a composite value area. And then we go to the day VWAP, and we say overnight. Let's have a look. What's the market done overnight? The market has, it's clearly imbalanced, right? You can see that straight away. So what's the market condition? It's imbalanced. What's the rhythm? You know, what I'm happy with either really. You can say 0.5. I'm even happy with 1. It's just a standard sort of normal trend. So we can write that down. Normal trend. What else? Any failures or achievements? No, really, it's just broken out. So you can put a conclusion, right? Conclusion is what? Broke out. This is the narrative. You can call it narrative, conclusion, whatever you want. Broke out of CVA A, because if that's B, then that's A, right? Or you can number them however you want. You get the gist of it. Broke out of CVA A, and developed value below LIS, line in the sand. Looks aggressive and potential for shorts. But would prefer to wait for, because the thing is, if you think about it, it's a little bit out of whack at the moment, isn't it? The rhythm is what very much, we're heading down, but if you look at, the rhythm in terms of market rhythm, do you see? It's probably, ideally you'd want to enter somewhere there, wouldn't you? Ideally, would take shorts down to here. Okay, so but would prefer to wait for 1, 0.5, something like that. SD1, 0.5. Right, that's a pretty fair hypothesis, wouldn't you say? I think it's pretty good. Options, there is a way you can, and I apologize if I can't find it, but anyway, that's okay. Modify text, options. Select, sorry for the delay in that, there you go. Haven't done this in a while. Then can you see you can change the size, like maybe you want it to be bigger font or something. You can have that there, right? It's up to you guys, you can do whatever you want. Or you can write it down, right? The way I used to do it is I used to print it out and then I used to just draw on it, and then eventually I stopped doing that, and actually I just like to, I even had a period of time, and you see me, I post in the Discord my hypos, where I draw them out. So you can actually use this pen, just with a mouse, like this. You can draw them out. So whatever you want, however you want to do it. In fact, let me get rid of that. I'm just going to draw it with a pen now, but it just makes it easier. So we're currently there, hypo A is what? Well, we've written it here. For us to come back here and then move down here, that's hypo A. Okay, this is how I would do it. That's what I would do is I would mark this and say, that's my line in the sand. I only want to be short below here. And in fact, do you know what I would like you to do, if you don't mind, and I think you'd find this quite useful. Let me just start again, is I'm not going to do this every time, it's going to take me too long, but what I think would be very useful for you is, I don't want you to think of these as, I said, mathematically we get obsessed with value areas having to be perfect points. What you can do is, I just want you to mark these in, just create little zones. You're going to find it very useful. Fiddle around with it. You don't need the outline. So I've got rid of the outline. You see that? Chart drawing properties. I've got rid of it. I don't want an outline. let's just make it a nice little zone, right? Color, again, just do what you want, right? At the end of the day, it's like whatever suits your personality. Could be someone who likes a bit of pink, whatever. Yeah, let's go for pink. Click OK. Great. So that's my line in the sand. I don't want it to show price labels. I'm going to click off. Do you see that? Don't want it to really show me the price labels. And then you can pick whatever you want. You see I've got my own ones that I've used in the past. Hypo secondary, 50-50, blah, blah, blah. Don't worry about all of that. They're just ones I've used in the past. And then you can put name, LIS, whatever you want, and then just hit save. Okay, and then click OK. And then next time, you know, if you're drawing something, you just go chart drawing properties, quick load 5. Do you see? Just brings it up, alright? It's up to you, just a little handy tip. I think it's quite useful to have these as little zones so you don't get obsessed, because then you know that, I talked about the acceptance thing. Let's say you are here and you have a hypo, you know it's really got to do that and have some acceptance above, right? Rather than it being that pure line. Yeah, when you write it down, you can put your LIS as 280, 2815 or whatever the level is, but obviously that will give you some sort of leeway to have to build value above it. Hope you can see that. I think that's quite useful to do. I'm not going to do it every single time, but I do think it's quite useful for you to do that. And in fact, we can even do it here. Chart drawing properties, was it number 5? Yeah, line in the sand. There we go. So that is basically, do you see now? We've created a sort of map for us to say, yeah, do you know what? Below here, I want to be short, I want to be targeting here. Above here, I want to be long. Doing what? Return to value. And you're going to have your point of control there. There's your point of control. By all means, mark it. I think it's pretty good habit to mark that. You can see that point of control there. And you should see it marked here. Can you see it there? Okay. Because that would be like your scale out point or whatever you want to call it, isn't it? Right, so can you see we're developing now a real framework. I hope you're finding this useful. You can really see all the work you've been doing over the last few sections coming to life now. You can see we've almost created this sort of map for us to start to trade around, and it's a value map, right? That's essentially what you're doing. So hopefully you can see you don't really need indicators and stuff. This is true market order generated value areas which are helping you trade in and out of. And there is one thing I should mention, in that for now I want you to keep it simple. Just have this as your line in the sand. When we're above it, value expectation is what? We've broken it, we're going rotational. When we're below it, we've broken it, we're going imbalanced. As we get more detailed, we will have times where we're going to be down here and I'm going to be targeting a return to value pullback from below because of whatever reason, but it's going to be too complicated right now. So just keep it simple. Have your line in the sand for the day. You may have 2 line in the sands, whatever. It depends where we are, obviously. We could be in here, right? Therefore, you'd have this line in the sand and you're going to have this line in the sand. And you look to obviously break out, whatever. You see my point. But obviously for now, we're here. We know that's a line in the sand. We want to be below it. We've broken out of it. You've got your narrative. Broke out of, CVA A. So you can mark this as A. That's B. Hope you can see that. As I said, I used to actually draw these in whatever. I mean, end of the day, everyone's different. Find what works for you. And then just observe it. That's all I'm saying. If you want to take executions, do that. I think it's quite a good idea if you want, just to keep you in the game, interested, whatever. But don't take it too seriously, because like I said, I don't actually trade just using day VWAP and composites. I'm using multiple investment horizons, because for all you know, guys, there could be and don't worry about this too much now, but obviously it's coming slowly. This could be a huge weekly VWAP, and I could be interested in getting long here. I'm not going to be selling into this in a million years. So you've got to remember, take this stuff with a pinch of salt if you're going to trade it. You've got to take this stuff with a pinch of salt, just because I'm going to be introducing obviously other investment horizons, and you're going to get this guy's order flow coming in. He's going to smash the market, and if you're fading it, it's not always going to work against you, but generally you're going to get blown out of the water. So you wouldn't be trading in this environment. You might just step back. Actually, I don't want to trade, right? But for now, I'm just getting you developing hypotheses. If you want to take trades, do it. I'll show you how to do that. Hope that was very clear in terms of how to develop hypothesis. So let's put that back. So here, what did we say? We want to have, hypothesis A is here to then go down to here. Right? Now, my hypothesis B would probably be for that to fail. Okay, well, what else could happen? It could fail. We could end up starting to go back here. But for now, I don't want that you to necessarily trade that, because like I said, I only want you to be thinking about what is this? I've said it here, expectation versus here. So below 2815, you're only looking for breakout of value. You're not looking for the return. We'll look at returns from outside later. That's the next stage. Right now, we don't have that as an expectation. It's not in our hypothesis. You can by all means have it in a hypothesis that isn't traded. That's all I'm saying. Is you can say, you know what, it failed. Potentially we're going to go back. And the market condition that I've got at the moment, might change and go sort of back. It could go rotational. Stuff we've talked about in length intraday. So let's just play this and see how this plays out. Apologies, I did get rid of that, but I've already said what I expect. So it's about 10 minutes into the open. I'm going to push this forward 2 minutes. Okay, I'm going to speed this up a little bit, maybe 15 times. Let's speed up a little bit more. Play. Sorry about that. Don't know, something happened. You see, sometimes it can get a little bit stuck. Don't worry about it. Just flick it a little bit. Can be a bit temperamental. All it's doing is just loading data, and if you fast forward it too much, it needs to catch up with itself. That's all it is. So, if you're fast forwarding a lot, you're just going to have to accept that that's what it's doing. So you saw the market open. Can you see you got your new profile for the day there? Okay. So what did I say? I want to see it sort of in this region, and we'll see if we can get a short in. And just whilst I'm waiting for that, so if you don't want to use these candles, right, you can just get rid of them. Hide. Okay. Basically, that's what, I said I just use high-low candles, so that's what I'm doing. If you want to, and then you can just kind of take the microstructure breaks or whatever if you want, so you can just look for the market to break, and then obviously put your stop. But try the Iconashis. I think they're pretty good. Let's pause that. Hold on 1 second. Show the Ikanashi. So we've turned there, right? You see, it's gone. I think that's pretty good, actually. I have no idea, honestly. Could be a disaster, but that doesn't matter. You see, it's roughly within that region. So let's enter a short position here. Obviously, our ultimate target is here. I'll probably take some out there or whatever. Just before, obviously, the overnight lows. So let me show you how to take a trade. So you go to chart. You go to trade. Open trade window. The chart, and you're gonna see this. It's up to you. Take 2 contracts, 4 contracts, whatever you want to do. You're just playing around with it at the moment. I'm not going to tell you how to split your orders up. And then you can go to targets, and then you can set these however you want, guys. So, but let's go to main 2, 4. Hold on, sorry. It's been ages since I looked at this. Right. Alright, so let me show you what you do. So depending on how many contracts you've got, let's say we've got 2, okay? What you do is you go to targets, and let's just remove these. What you can do is you can either just place the trade and then close it, obviously, or you can have predetermined targets and then you can move them, play around with them. So that's what I would do. I would add target 1, let's say, I don't know, let's put it at 20 ticks. Do you see, because you've got 2 contracts, if you've got 4, you need to set different targets. Target 2, and I've put a stop in, but we'll come back to that. Target 2, we're going to have it at, say, 40. Well, let's do 30. You can play around with this. Stop. Which one do we want? Yeah, we want stop. Stop. And for this, you can have, I don't know, 20 or whatever. What my point is, you can change all of this anyway. And then you can click on main. And then you can... Nope. Sorry about this. Hold on. Let me just do this again. So we had... let's just make this up. 20, 30, and let's put the stop at 20. Okay. What it is you want to save this. So you go to M. It's been a long time since I've done this. I'm surprised I even remember. What is it? Confirmations? No. Settings. Is it save configuration? Yeah, save configuration. And then in here you can call it whatever you want. So just call it 2 contracts. If you've got 4, you can call it 4. Just save that. And it's just going to save it for you. Okay. So you can load up all these different presets. Okay, so now we're going to just slow this down to normal speed, hit play, but I'm going to sell the market. Okay, there you go. Okay, so you see I can now move these and say nope, I want my stop here, I want my final target to be kind of here, I want my take profit to be there. Do you see what I mean? You can just change them. That's why I said don't worry too much. So I'm short to 2771. I've got the sim account. Okay. If you want to show P&L, there is a way to do it. Really being put on the spot here. Anyway, you can see, just watch the market there. We've gone short. Let me come back to that in a second, because what I want to do is, I just want to talk a little bit about this stop, because we talked about this before, didn't we? Do you remember what we said? So you've got options. I've said to you, you can enter how you want. You can enter on that sort of micro break. So you would have entered potentially. You can enter when the candle turns red as it's turning, which is what I just did, albeit one candle too late, but that's okay. Obviously, I'm just trying to give you an example. So that's the entry dealt with. Now we're going to deal with the stop. So either you can have your stop above here, and I hope it's clear. Just zoom out a little bit. Either you can have your stop there, just above that swing high. Obviously, you would have got taken out there, and then you would get back in. Or you can have it behind what I would not suggest, but obviously it's up to you. Do you remember what I said? Where do we need to go to? Probably the previous area, so it's VWAP really, isn't it? Because the rhythm is kind of normal stroke 0.5, so probably around the VWAP. You know, if you're going back to the VWAP, you probably failed. Obviously, that means that your risk is much higher, but you know, it's up to you how you play it. I'm going to speed this up a little bit. Okay, 10 times. 30 times. Okay, so if you had been stopped out here, hope this is very clear. What I said to you before, if you wanted a very tight stop, do you see, and you got stopped out and the market starts to turn again, you have to have that psychology willing to re-enter it, and your stop would go above there. Do you see, it's a different type of trade management. I'm showing you different ways you can manage it. Me, I'll just say, do you know what? I'm just going to put my stop there. I'm going to relax. I'm going to go off. I'll be back, whatever. And actually, that's not why I suggested it. I mean, you can if you want, but when I show you cumulative delta, it will allow you to really focus on cumulative delta, and obviously you can start to look a little bit at order flow and stuff. It's up to you at the end of the day. Obviously, when you're up here, you want to really make sure that you're going for your targets or whatever, and you can manage it as well. As the market starts to turn, say you obviously take out your first target, you're not going to leave it there. You can start to obviously, I don't like the word trail, but yeah, you can start to play around with it. You can move it, obviously, whatever, to an area that kind of makes sense. Let's play the market. Honestly, it's just so random. I have no idea what's going to happen. Yep, there's the market turned. Does it take us out? Nope, it didn't. Didn't quite take us out, did it? Just wait and see what happens. Sorry, there's a flight there. See if we get taken out. Nope. It's just messing around, isn't it? Really. I'll just speed it up a bit more. It's really not doing much, to be honest. Okay, there we go. So we got taken out. So now what I might do is just move it up, move it behind the lows. Do you see? Just secure some of the trade and press play. And we've had some aggression coming in. I might just move this down a little bit more. Obviously, that's the final target. I'm not really going to play around with that too much. This is why I like the Heikinashi, because it lets you kind of, without thinking, oh, the market's new swing, micro swing, you can kind of see, look, it's turning back now, it's turned blue. It's the first time you're thinking, oh, maybe there's a chance that we're pulling back slightly. Okay, so honestly, there's no right or wrong way. I've told you this. There is no. If anyone tells you there's a perfect way of trailing it, this, that, talking rubbish. There isn't. I'm going to show you cumulative delta so you can mix it up with this. So what I might do here, let me explain to you what I'm thinking. You can just leave it, honestly, it's up to you, but for the sake of time, because I don't know. Basically, we've now moving from almost a slow to a kind of a normal, isn't it? So, because I've already been taken out of one, it's just kind of, again, there's no right or wrong way. You can just leave it where it is if you want. Where is it at the moment? Yeah, it's fine. Let's just leave it there. Let's play. See, what I would do is basically, if now this is why the Haikanashi is quite useful. I don't use it, but I'm just giving you some ideas. As it starts to pull back, if we can take out this low, what I can tell you is there will be obviously a lot of people that probably have stops around this region. So if we can take out this low, you can just put your stop along here and just manage it dynamically. Until the move happens, I wouldn't do that. I would stick with my VWAP idea or whatever it is that you're doing. If you want to put it above, obviously this swing and then get back in or whatever you want to do. But once it starts to move, you can start to lock things in, and I think that's potentially a way of doing it is as soon as you break the low, you move your stop above. Because typically what you will find is when the market rhythm starts to break down, you will get a lot of people who will just head for the exits or whatever, and you'll end up taking drawdown or whatever on that position. So sometimes it swings and roundabouts, but like I said, it depends if you want to actively manage it or whether you want to do it a different way. There's different ways of doing it. I'm just giving you some ideas of how you might be able to do it, or you can just leave it and see what happens. Let it mess around and come down, whatever. Like I said, I literally have no idea what this is going to do, so just speed it up a little bit. Maybe a little bit more. Okay, so you see how it took out the low here? The market's starting to form a faster rhythm. So you can move again, I'm just giving you an idea. Develop what works for you. I'm just giving you some, I think, sensible suggestions that, using the Haikanashi, you can really say, oh, we just had a new low. Okay. Rhythms change slightly. We're really starting to develop into, we're starting to go pretty fast now. So, yeah, it seems sensible to put it there. And then, if it broke that, then I would put it there and just manage it all the way down. Okay, so let me go and open this. Okay, and then we got taken out. So nice bit of profit on that. Now what I want to do is basically, so I did just pause video for a sec, and I did find it actually now, because I want to give you the option of showing the P&L. So basically I found it. I just literally paused the video filming for 1 second there so I could go and find it. So what you do is you go into chart settings, and I knew it was in chart settings, I just couldn't find it. And it's in here, advanced settings, and you see profit loss format. Do not display. You can change it to like currency value. Can you see? You made $975. You can change it to points. Okay, 19.5 ticks, 78 ticks, whatever works for you guys. Currency value, apply. Alright, so I just want to show you that you can do all that. You can play around with it. Just play around with all the settings basically to your heart's content. Don't be scared to try things. Just mess around with it. So I'm going to go back to do not display and just leave it as that. So yeah, that's it. I'm not going to take any more trades because obviously that took a long time to do. And I'm probably now going to really jump ahead as fast as possible. Okay, just to kind of maybe give you some more ideas around what I would be doing essentially. But should I keep this here? I'm not sure. Let me think about it. Let's move forward. So like I said, I'm going to jump quite a bit now, if you don't mind. Maybe 12 hours at a time. See if this works. A bit hesitant to press the button because you just don't know what to expect. Yeah, there you go, perfect. Alright, so I'm just going to pause it and I'm just going to jump. And let's see what happened the rest of the day. So, you know, I said for every hour, obviously I don't want you to jump 12 hours at a time. Maybe jump an hour, maybe jump 2 minutes, maybe just let it play at a faster speed. And I did say to you, you know, if you really want, just get some really good practice in. You know, what happened? Market condition changed, didn't it? Where did we go? And in fact, it was about here, isn't it? It started to turn into a rotational environment. Did that present any trading opportunities? Not really. Look, that was a line in the sand. If this had happened, if this LIS was here, can you see? Great opportunities to get long. Has something changed? I think I'd written that on the thing, narrative of the development. What has the market achieved? Failed to achieve. Guys, can you see how failing to achieve something is just as important as achieving it? So if I had my narrative, right, for the day of the developing day, this is how I would be writing it out. I would say, what if I text? You know, I would say something like, I don't know, later in the day, 1 o'clock, 2 o'clock, whatever. I'd be constantly writing 1300, you know, slow trend, going a little sideways, right? It is, isn't it? Can you see? Here, I'm not going anywhere, just going sideways. You can kind of tell this is in a sort of precipitous state there. And then, what, around 12:30? Sorry, I've put 1 o'clock here. Really, that's, what, by 11:30, isn't it? Apologies, didn't check the time. And then later on, so what's this? 12:30? Call it 1 o'clock. DVA condition changed, right? Okay. Guys, this is journaling at its finest, right? Not even exaggerating the point. This is proper journaling. If you're in a professional firm, this is the sort of stuff I was told to do. Every hour, 2 hours, write it down. It really develops this amazing understanding. Obviously, we'll get into journaling later, don't worry, and I'm going to mention this again, but that's all it is. I just wanted to get you started. 1 o'clock, DVA condition changed. What else has happened here? Failed to reach CVA target. CVA target, which means what? Sellers potentially have lost control, right? Guys, I'm doing this in so much detail. I'm not obviously going to be able to do this for all 30 days. In fact, I'll probably just do it for this one day, and hopefully it gives you plenty of ideas of what you should be doing. And then obviously I'll just quickly talk through the rest of the days because obviously time's limited. So yeah, can you see 11:30, 1 o'clock? Keep typing, guys. What does that mean? Sellers potentially have lost control. Failed. This failure does what? Adds more probability to us going the other way. But obviously the line in the sand isn't right. If it was, if this, I hope that's clear, if this was down here, can you imagine the potential opportunity here? Because this failed, right? If it had achieved the target, maybe sellers aren't bailing as much because they're happy, they've exited here. Guys, can you see? A lot of sellers are stuck. When it comes up here, what are they going to be doing? I'm hesitant to say the word because I don't like to speak out of turn. They're going to be crapping their pants, let's be honest. They're going to be bailing, puking out of their positions here because they didn't achieve the target and they're holding their shorts. That's why I say failing to achieve something is just as important as achieving it. It can give you crucial contextual clues. The other contextual clue was what? Condition changed. From what? And I should have written it here. Condition changed to, where are we? Text. You can write this down, by the way. Of course, don't need to write it up here. Should have lost control. Condition change to what did it change to? Rotation. Okay. Okay, so hopefully that gives you ideas. Just give me a sec, I just need to check something on my recorder over here. Okay, great. Just want to make sure I'm not covering anything with my head. Yeah, so that's it. Condition change. Sellers potentially have lost control. Deviate condition change to rotational contextual clues. Narratives changed. Maybe we have an opportunity to get long, but we don't because we are. What's our expectation? We can't play a return to value pullback until we get above 28.15. Okay. I mean, in theory, obviously, you could play this rotation within developing value to just the other side. But again, that's a little bit more advanced. I don't want you to think about that right now. But if you're already thinking about that, then that's very good thinking. Because at the end of the day, what's your value expectation when you are in a rotational environment? Is to test the other side of value. So there is potentially you could take it, but obviously, like I said, it's a little bit advanced. So let's now move on. Because I appreciate this probably taking a lot of time, but let me keep that there. Just get rid of this. Okay, so that's that day pretty much dealt with. Let's just fast forward now. Jump. Okay, so that's no longer prior value. That's prior value, right? So what I would do is I would move that or redraw it or whatever you want to do. Remember guys, I'm jumping ahead 12 hours at a time, right? You're going to be doing this more 1 hour at a time. The market wouldn't have even opened. So your hypothesis is going to be done, around this stage. I want you to, before the market open, to do that. So potentially, it's just a mess here, isn't it? Isn't really any clear rhythm. Yeah, there's nothing there. Shoot forward 12 hours. So now, what time are we at? 10 o'clock at night. Okay, let's merge these two. Merge with next profile. And let's go back to normal colors because obviously it's a composite. Okay, so we don't even have, that's, in fact, we can't do that. So that's not the prior value area. Yeah, we don't really have any levels, do we? Let's just move this down, move this. Down, so that's that day. Let's just jump forward. Really, there's not much, is there? Let's be honest. What is that? Why have I got that there? Don't know. Let's get rid of that. There's nothing really on that day, is there? Because we didn't have any really levels to key off. It's the advantage of replay is obviously you can just keep fast forwarding, isn't it? So here we've got prior value, and I'm gonna just change the color of that. I don't think that's happened. Keep that. That and that's the fill color, isn't it? Change it to that. You can obviously load these again, like I showed you. You can call them TC6. Maybe call that. TC6 and call it prior value area. Save that. Okay, so we'll have to do that again. Okay, so let me fast forward this. Obviously I'm not going to go, we'll be here all night otherwise. And let's just see what happened and see how you could have played that. Okay, so what would your line in the sand have been here? Move this up. That. Move this up. That. And in fact, these are still lines in the sand, isn't it? Copy and move drawing. There. Copy and move drawing. Again, there. I'm not going to do all the hypo stuff, I did it in incredible detail, you can see there. Let's see, what were the trading opportunities here? Well, think about it. Fantastic trading opportunities. You've got, as you came into this day, right, what were your options? Well, you had your line in the sand at the open. Right, where was it? Here and here. You've gone heavily imbalanced here. Probably not many trading opportunities, I would suggest, in this area. Then you failed, right? You failed. And what have you done? You've gone rotational. And when we go rotational, what do we expect to happen? Or when we break, value area low, what do we expect to happen? We have this shift. I'd actually printed it out so I could talk it through with you. The institutional value expectations framework, right, is what? Value area is broken, expectation is to go balanced or imbalanced. Obviously, I've put here vice versa. So here the value area low is broken and we start to come inside. Look at this, nice acceptance. Look at that, guys. Perfect trading opportunity for you to get long. And what's the target? Other side of value. Obviously, you can scale this either at the VWAP or at the POC or whatever you want. And actually, where was the point of control? It was there, wasn't it? I'm not going to bother marking it, but it'd be somewhere here. So you might be scaling. It's the same point, really, isn't it? Around there. You hold the other side. What a great opportunity there. And you see, as soon as it turns blue, or obviously if you have a micro structure break, bang, you get long, right? And you would have written this down, wouldn't you? Because you wouldn't have had a CVA, but the CVA would have just been kind of the prior value area. And you would have had a line in the sand here, wouldn't you? Okay. And what would have it said? It would have said, your expectation is what? Greater than 2824 would have been what? What do you call it? Return to value pullback. Okay. And then below 2824 would have been a breakout value pullback. And in my opinion, it was a fast trend. It was very, very fast. It didn't really give, there was no clear sort of rhythm here. It just came down like that, didn't it? It's different if it's doing this. Do you see what I mean? It gives us some sort of rhythm to key off. Didn't have that. Just didn't have it. So it's very, very difficult for us to actually get in on anything there, in my opinion. And don't forget, this exercise isn't about making money. It's just to get you used to what? Using, can you see? Developing value area with static value area. Can you see how the two complement each other beautifully? If you want to go rotational, right, in terms of we talked about this a lot. If you want to go rotational, i.e. your expectation is to return back to value in terms of, and have a pullback within this area, what would you ideally want? Either you'd want this to be imbalanced up, right? You've broken in, you're imbalanced up, the new investors on the day are aggressive. This goes in perfectly with your expectation on the value expectations framework. I hope that's clear. To go to the other side. Simple, guys. Keep it simple for this exercise. What's the alternative? Either we go imbalanced up or go rotational. Look, and this is incredibly powerful because we've had, if you're doing your 10 o'clock, what happened? What has the market achieved? Failed to achieve. It's failed to achieve what your hypothesis would have been on this day, right? It would have been, as we said, 2824, less than 2824, would have been what? Breakout of value pullback. And where would your target have been? Guys, here. You failed. Once you started to go back above this line in the sand, this has clearly failed. You've had acceptance above. The guys who've got short, guys, they're going to be running for the exits. Massive opportunity to get long. Hopefully that's clear. As you're writing things down, we failed. And we've basically now flipped to this would have been obviously greater than 2824 return to value pullback. And then your target, it's all there, guys, on your value expectations framework. We're not doing anything different to what we've done before, but we're just combining it all together now, where you're using, obviously, developing value to help you trade static value. That's all you're doing. That's all you're doing. Okay. I just want to make sure I haven't missed anything in that list. No, nothing. Okay, let's move on. Probably going to speed it up a little bit. Let's move forward another 12 hours. Any of these invalid? Nope. Okay, so let's take a look at this. So let me just copy and move that down. All of these areas are valid, aren't they? This one, let's get rid of it. That's not valid. Let's merge these two. Okay. Obviously, guys, you're going to do this a lot slower than I am. I've got 30 days to cover. So I'm just sort of just jumping as fast as I can. Right, so we've got three clear static values for us to key off here. So, on this particular day, we've obviously come into the market and our expectation, our line in the sand is what? 2737, which is this area. So I'm talking about this day here. Forget about the fact we've opened overnight. So essentially we would have said below here would have been a return to value pullback to what? point of control, and then potentially the other side, obviously. So we never achieved that. So I'm just thinking, would there really have been any trading opportunities here? Potentially there. In fact, that would have been a really nice trading opportunity. As you came into the session here, guys, can you see plenty of opportunities to trade? You come into the market, what's the rhythm? Slow trend, okay? What's happened? You've come in, you've accepted below this line in the sand, okay? You've pulled back, and yeah, I'm rushing through things, but I hope you can see this. There's so many opportunities to enter trades here. You would have entered here, maybe got a scale out, you might have stopped out, then nothing, or potentially you might have wanted to get long here, got stopped out, then you come back down, fail, and then potentially, obviously here there wasn't great acceptance here, then you come back down, and then potentially there probably wasn't enough of a sort of pullback for you to enter the market at this stage, and you would have obviously wanted to target there. Then you came into a new line in the sand, short, scale out, or you may have wanted to wait for this condition change to take effect. So I apologize, I jumped the gun a little bit there. And I'll tell you what, the way that I like to do it, right, with these condition changes, is that let's say you're going in this slow trend or whatever it is, and you see how it changes to a fast trend. I like to see us pull back once, test the fast trend, and then if we go down and test it again, I'm happy to enter. Because then the fast trend is established. I hope that makes sense. I like to see it tested once, because I like to see that it's established. So look, first time, do you see the sort of rhythm changed here? We almost went from a slow trend, then we went rotational. Like I said, you might have had a stop out trying to get long, back into this sort of value area. But you may not have taken this trade because probably the point of control is you're trading right into the point of control. So maybe you wouldn't have taken that trade. I'm not sure what the point of control is, and I'm not going to check it, but or you may have, doesn't matter, whatever, you take the stop out, whether it's here, whatever, and then potentially you get short again because you're just going back into the slow trend that exists. But you see the rhythm starting getting faster here, almost to 1.5. Bang, we tested 1.5 once. Nope. Let's see, does it stick? We go down, we come back, take the short trade, see if it sticks, scale out, and then maybe get stopped out of the rest or whatever, and then we just turn to mush the rest of the day. Plenty of trading opportunities. I'm not saying that I trade this way. In fact, I will combine this with multiple other VWAPs. But I look at this. This forms a big part of my day, of my thesis, but obviously I combine it with other stuff. But it's good to just get you guys started at some of the things that I'm looking at. Right, let's now fast forward. So all these look fine to me. That's intact, that's intact, that's intact. Okay. Seems to have got bogged down again. Just give me a second. It's because I jump so much that it doesn't like it. Sometimes it can get. Just need to give it a second to catch up with itself. Let me try doing it this way. There we go, it's moving now. Because I'm moving it 12 hours at a time, it just needs a bit of time to catch up with itself. That's what it is. works. There you go, yeah. Okay, so I've got it to jump forward there. So where were we? So there you can see trading opportunities. There, look at that. Really, really nice, isn't it? You come in at the open, you pull back. You've got this nice, beautiful imbalance. Take it to the other side, guys. All right, really nothing much else for me to say on that one. Then I'm going to skip forward. Again, look at this. Beautiful line in the sand. You might have got in there, got stopped out, and then condition change. I'm not sure if you would have been able to get into that one. You see, look, sometimes it's not perfect, is it? At the end of the day, you know, you're doing your overnight condition, which is quite rotational, and then you go into like a normal trend, and can you see you change? Clear change in market condition. Look at that, guys. Look at that. Clear change in market condition. You broke your line in the sand. Look at that. Perfect opportunity. Where was the target? Balance, other side, combined with potential rotational environment here, or a change in direction, or a change in sort of rhythm. Now, I'm not saying, you know, if I'm sitting here, obviously it's easy for me to say because I'm fast forwarding it, but that doesn't matter. The exercise isn't to make money. I want you to take trades, whatever. I'm just trying to show you how you can start to combine these two things. Obviously, I'm combining loads of things together, but this is a brilliant, brilliant, brilliant way to start combining things together. So I wouldn't merge any of these two. Where are we? On the 24th. I'm going to speed it up a bit because I've got quite a few days to cover. You'll have to forgive me, I might just end up skipping some days because it is taking a while. Okay, so we've got up here. So clearly these two are going to be merged. Copy, move. Right, just jump this forward a little bit. Alright, look at that, guys. Come on, you can't say there aren't some unbelievable trading opportunities here. Okay, you've gone in balance, you've gone slow, and then you're starting to build here. What did I say? Test it on the second test. I would say that the rhythm, in my opinion, is established. So you've tested the 0.5 once, come back, you test it again, turns blue, get long. No real clear targets because we don't have anything, but you know, obviously you're going to probably scale there and then you can just kind of hold it and see where it takes you, up to you. But look at this, just very clear opportunities, you know. That's what I want you to do. Just, it's not about making money. I want you to see how developing value works with static value, because I'm going to bring in a lot of different types of developing values and static values, and if you can't understand two of them, can you imagine? I'm going to bring another 10 in. It's going to really just be too much in one go. Just keep doing this exercise. I would say like literally cover months of data as much as you can, master this, and then I'll move you on obviously to this is why I say this thing takes months to master. You know, I did say 6-7 months before getting on the simulator. This is why I want you to get the practice in. Fine, use the simulator I'm showing you, and obviously you can press play and whatever and do what you want, but at the same time, you know, you need to see as many of these as you can so you get used to combining developing value with static value, because I'm literally in, you know, sort of due course, not even that far from now, I'm going to start bringing in all the VWAPs essentially from all the different time frames, and it's just going to be too much because you're going to see previous value areas from the VWAP, you're going to see obviously a lot of this static value from the composites, you're going to see developing value from day, week, month, year. It's going to be a lot for you, so I would suggest just keep doing this for a significant period of time. You know, look back as many months as you can till you just master this process. There's no sort of exact number I can give you, but obviously I would suggest you do as many as you can. I'm not just going to keep skipping forward, basically. Try to give you some varied examples. Let's merge that. Those two need merging, right? Okay, copy and move. There. Copy and move there. So it's a new day. Just going to move this forward. Okay, absolutely, should be killing the market on a day like this. Look at it, guys. It's just doing what? Breakout of value, pullback, and plenty of opportunities, right? I mean, look, this is classic using developing value area. Classic value trading. Sorry, not PVA, what am I doing? CVA, beg your pardon. Combining developing value with static value. Okay, crystal clear, right? What's your line in the sand? 2876. What's my hypothesis? Greater than 2876. Less than 2876. RPB. Keep it as simple as that, guys. So above here, I want to get long. Below here, I want to get short. Where are we? We're above. I want to get long. What's the developing market condition at the open? What did I say? One test. Second test. Get in the market. Slow trend. Third test if you didn't get in. Look at that. It's just beautiful. Yeah, we had some rhythm changes here, whatever. But the point is, could have scaled out here. And like I said, do you remember what I said? Every time it pulls back and breaks the top, you can move your stop here. Breaks the top, move your stop here. Breaks the top, move your stop here. Breaks the top, stop. And you would have got stopped here. What a trade. At the end of the day, could have, normally I like to scale out at sort of previous areas that we've been to. So it could be obviously day high or whatever, because obviously a lot of people are watching those areas, but I leave that to you. There's no right or wrong answer, okay? If anyone tells you, yeah, make sure you take 2 times your risk, 2 to 1, nonsense, guys. You've seen my stats. At the end of the day, I don't trade like that. You need to take profits in areas that seem logical. So it could be here. Doesn't matter. Even if your stop's here and you're getting 3 times the reward, it doesn't matter. At the end of the day, you've got to learn them to trade the market to where the market orders are telling you are logical places and adjust it accordingly, right? Because this whole notion of linear risk taking, I tell you, it's a marketing scam. That's all it is. Because if they tell you that, you're going to buy the course, because then you get this comfort blanket of, oh, my stock will go here and my take profit will go here and my bank account will go up. Guys, those of you who have done those type of courses know it just doesn't work. Firstly, the contextual read is complete rubbish anyway, let's be honest. It's not based on market data, it's all based on squiggly lines and stuff. Here I'm showing you value trading at an incredibly high institutional level. You would not believe. This is literally like value area trading at the highest institutional levels, alright? I haven't introduced all the other VWAPs. When you see all of that, it's going to blow your mind, because obviously I'm showing you other investor perspectives. That doesn't mean you're going to be able to kill the market with it until you've done your 1,000 hours screen time or whatever. But what it does mean is when you're putting that screen time in, it's going to be incredibly effective. That's all the point is. When you're looking at squiggly lines and you're developing screen time, you're not learning anything. It's hindering you. You're wasting time. Here, this way, you're seeing obviously value areas on a intra-period basis, new investors. How are new investors treating fair value that previous investors have established? That's the only interaction that's going on in every single marketplace in the world. So I'm showing you that. So let's just move on. Okay, like I said, I'm just going to go really as fast as I can now because let's see, was there another? I think there was an opportunity, right? Apologies about that sound. Okay, there you go. Potential opportunities here, but we didn't quite reach the other side, right? So some potential opportunities, some rhythm changes, but look, can't argue that there wasn't potentially shorting opportunity in here. Maybe you would have wanted it to, just, but look at what the rhythm was. That was it. Really, that was the entry, wasn't it? At the open, you'd have maybe got a scale, and then probably you might have got stopped out. Probably would have got stopped out, and then it just kind of went sideways and turned to a bit of mush. Then it pulled out, and then there wasn't really anything, was there? It just really turned to mush the rest of the day. The point is, you kind of can get a feel for what the market's trying to achieve here. It's obviously trying to get to the other side. We've had a breakout of value. Bread market. Do you remember, guys? Right? Exactly the same thing I described in the other video just recently. What was it? 150. And it wasn't. It was the milk, wasn't it? It was the milk market. 150. That's your 160. That's your 140. And that's your dollar. Right? Look what we did. Gone in balance. Yeah, it was a mess. It's not always going to be the way you want it to. Of course not. You see, the market was seeking value lower, and look what happened. Didn't even notice that. Bang. Right, guys, this is what the market is doing. Day in, day out, night in, night out. This is what the market is doing. It's moving from value to value to value. Okay? If you get this, and then you can also get, alright, the other 10 things that I had on top, but they're just VWAPs. Right? It's just static value and VWAP. I've already shown you. But here, you're looking more from a shorter term perspective. We need to know what are pension funds doing, what are medium term hedge funds doing, what are different players doing in the market, other institutional investor types, because if you're trying to get, for example, short here, but these guys are buying the market here, it's gonna go slam in your face. So obviously we need to learn that, but for now, don't worry about that. Just learn this and understand that this is all the market is doing. I do this every single day. I mark these areas. You've seen it on my chart because I know, fine, I want help to help me navigate how exactly this market might do this. Should I get in? Should I not? But ultimately, my targets, I'm showing you exactly what I'm doing. Value to value to value to value. That's all I'm doing all day long. And in fact, you can see it here. Value to value to previous value to previous value to previous value to previous value. Right? So all the market's doing in balance, 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 balance. It's all it's doing all day long, guys. It's all it's doing. We've been through it a million times, but let's do it another million times if we have to. Just want to make sure everyone gets there. Has it decided to freeze up again, unfortunately? Sorry, it does happen because I forwarded it a bit too much. It needs to just catch up with itself. Just give it a second. If this happens, just be patient with it. Let it catch up with itself. There you go. It started again. I'm just getting a little bit impatient, obviously, with it. Okay, so let me try doing it this way. Just speed up a bit. It's because I'm going so fast. That's the problem. It is causing it a little bit of. So you'll have to forgive me. This. Sometimes what I do is I just play around with this and just add a minute or whatever. Just helps it unfreeze itself. Play mode. Okay, there we go, 12 hours. So just don't worry, it's not that it's not working. Obviously I'm jumping 12 hours at a time, so it's got to reload all that data and work itself out. That's all it is. It's very normal. It's an incredible system that even lets you do all of this. Guys, just look at this. I mean, do you see that? I'm not necessarily saying there were opportunities here because it was a bit of a slow trend environment, but look what the market was trying to achieve. Crystal clear. Very, very slow trend. Doing what? Just went from one side to the other side, rotation environment, and it was this, wasn't it? And look where it was from days ago. It's from like almost 2 weeks ago, this value area that we're trading in between, and we're using developing value. Okay, so I am really going to motor ahead now because I think I've pretty much sort of proved my point, and in fact I'm even tempted to end it here, but let's just look at a couple more. Right. Go. Okay, so always get that problem, don't we? Merge these two, and obviously cut this. Don't forget to obviously cut that. Just delete that because I only need 2 of them, don't I, to draw onto the new one. Move, drawing. Right, let's delete that one. Okay, so we've got another clear path. That's all we're doing. We're just creating value to value. All the stuff I showed you in auction market theory, but this time we've got obviously developing value to help guide us for that path from how the market is seeking value and then balancing. That's all we're doing. Okay, so did we have any opportunities here? Yeah, golden opportunity, wasn't it? There, potentially, depending on how you read that. You know, guys, don't expect perfection. Either you're going to miss the trade, fine. Deal with it. Come back the next day. Otherwise, you know, if you think that was enough of a test, double test here to signify that. Obviously, we tried to go in balance. We failed. And the rotation kind of failed, didn't it? And it started to build value in this region. I'm not saying that was enough for me. I don't know. You need to decide that. From doing this, keep doing it until you kind of get a feel for it, you know. It's always going to be slightly different, whether you get in that or not. If you don't, you don't. Doesn't matter. Miss it. No big deal. Look, great opportunity here. Acceptance. Not enough acceptance there. Look at the rhythm. Plenty of opportunities. Worcester, it's more of like a somewhat in between, isn't it? It's either a slow trend or a fast trend. Either's alright. That doesn't really matter, does it? So there's confluence of obviously your rhythm. Perfect opportunity. Get long, get a scale out, and then probably would have got stopped out there. Great trading opportunity. Incredibly powerful stuff, this. Probably think can we mark this? Okay, not really much there. You can see it literally made the move in one go. Apologies if any of this covers my face. Just delete that. I haven't marked all the point of controls. Obviously, I want you to mark them. Yeah, that needs to get rid of that now. Probably not. Copy and move. Very strong area of confluence there, and then obviously copy and move there. Okay, so don't know if you would have actually taken anything here, because obviously you've gone, so you might have had a trade in there and then had to obviously get stopped, or if your stop was lower, really turned to mush here. We're just in a pretty rotational environment, but you know, the thing is, if you think about it, there was a trading opportunity in here, because what have we done? We've basically gone sort of normal trend imbalance. We've broken down. You may have, if you wanted to, take that trade. I don't know. There's a condition, a rhythm change there. Something changed. Nothing wrong with taking that. Absolutely nothing wrong with taking that. Obviously targeting the other side. Then we came in and we started rotating. And what was the rhythm of this rotation? Look. Do you see? It was kind of like a, it wasn't even a 1, it was more like a sort of 0.5, 0.5, 0.5, 0.5, and we were accepting within this area, so potentially some shorts. Nothing wrong with that. In fact, excellent trade, and then going to the other side, combining static with developing. Like I said, guys, it's never going to be 100% perfect. Obviously, me personally, I like to have these lines. You don't have to have them as thick as I've got them. You can kind of reduce them in a little bit, but obviously just made them as quite thick. But I like to have them. If you don't want them, obviously don't. You know, it's pros and cons. Sometimes you can see it clearer. Can you see actually? You can see it a little bit clearer. It's like really up to you what you want to do. You can see the acceptance nicely. Yeah, obviously I had my sort of lines. I like to give it a little bit of room, and do you know what? That's how I do it. You've seen my charts. I do have these areas marked out. I do like to just have them marked. And then obviously my point of control, etc., etc. Don't really see much here. Nothing really. We've already sort of hit target there, so you won't want to keep shorting because we've already hit the target. Okay. Haven't really mentioned this before, but I will be honest with you. I don't necessarily like to take second standard deviation imbalances because they're at extremes, right? I wouldn't necessarily. I don't even really like the fast trend that much. I don't mind it on the higher time frame VWAPs or the higher investment horizons. On the daily, it's okay. It's okay, but I'll just be a little bit more cautious. That's all I'm saying. You know, if you're in a quite a fast trend, obviously that imbalance, you know, people are extremely long. If things go wrong, they're going to bail quite quickly. So I would just be a little bit careful, you know, maybe keep your stop tight or whatever. But I don't take these second standard deviations. You know, I've talked about the probability, even though the maths isn't perfect. And actually, I've been sitting in this chair so long, I think it's a good 3-4 hours now, that I probably will call it quits if you don't mind, because I think we're coming towards the end. So, yeah, I think that's it. Okay, now we're in the live market. So look, guys, I hope that was really useful to you. Obviously, if you've got any questions, please let me know. Otherwise, yeah, just start banging these in the Discord if you want. if you want to do it in real time, obviously, like I repeat, I'm not doing it to be difficult. I think I've shown you'd rather have an educator that actually trades for a living than someone who's obviously doesn't. So that does unfortunately have the trade-off, which means I'm usually quite busy during market hours and stuff. And if you leave it in there, I'll go and have a look when I finish trading for the day or whatever. If I can't answer immediately, if I've got a bit of a break, obviously I'll do it. Um, but otherwise, you can always post it in there and share with others. The alternative is just do it using the market replay. Just literally do like hundreds of days. Do both markets, make mistakes, get confused, whatever. Just keep doing it, and eventually keep referring back to this video. Anyway, yeah, hope it was really useful. Get that task done. Start, and don't forget, do a hypothesis for every single day. I want you to write it out, draw it out, whatever way you want to do it works for you. Yeah, let me know how it goes. Thanks.